going on? What's going on? What's going on, everybody? How you doing? How you doing? Um, welcome. I just got back to the house. Had to take the trash out because Chris did not take it out. Had to take it out to the street. So I'm trying to get myself together. Had to restart my computer, so I'm trying to open everything back up. But we here. And we live, baby. We live. Excuse me for sipping the water in your face. But let's get to it, man. Let's get into it. Good morning, everybody. I'd like to welcome y'all to the overnight. God dog, get out of my way. I welcome y'all to the overnight price action for October the 7th, 2022. Oh my goodness. Man, I just opened up my Ninja Trader and look at that 15-minute candle. Oh my goodness. Were the numbers horrible? What were the numbers like? Look at this 15-minute candle right here. I can't even get through my introduction. I just opened up Ninja Trader. I never knew. So let me get the pleasantries out of the way and then we gonna get into it, man. Good morning. If this is your first time pulling up, here with at Tim's Tidbits, I like to say welcome. If it's not your first time pulling up, I still like to say welcome and give you a hearty thank you for always pulling up every single day. If you do not know who I am, my name is Timothy Lee Rogers Sr. I go live on Al Gore's Internet every single day, Monday through Friday at 9 a.m. Eastern Standard Time to talk about the overnight price action. And then we go live again in the evening, typically at 6:30 p.m. Eastern Standard Time. But during football season, we are doing 7:30 p.m. Eastern Standard Time. And yeah, man, that's it. I do it because I want to. I do it for free. I'm not on any other social media, so I ask that you hit the like button because I've been told that the algorithms like when you hit the like button and it's showed to other people. I'm not promoting this on any other sites, so the only way other cousins like you and me going to get this free information is if you click the like button or if you feel so inclined to share it with somebody. I want everybody to get this information for the free 99. That's why I do it for the free 99. I'm just a dude from Fort Lauderdale, Florida that learned how to do something. And now I try to regurgitate everything that I learned in a way that little Timmy Rogers, the voice that lives in my head, understands it in the hopes to help somebody get their aha moment. So again, please hit the like button. Let's go see who in the chat today. First up to bat is Cool It Now. Ooh, watch out. What's up, Cool It? We got Aloysius' mom up in here. Hello, Aloysius. Hello, Aloysius' mom. Good morning, here to learn and share. Good morning to you. The birds are chirping. That's me, of course. The link is in the chat. The link is pinned to the top of the chat. If anybody want to ask a question, if you want to pull up and share anything, if you want to pull up and pick my brain even. Not literally, but figuratively. What's up, FC? What's going on, Towns? Gabriel? What's up, Hatter? What's going on, Valdez? The Russells are back in the building. Haven't seen the Russells in a while in the chat. What's going on, Sanjay? I appreciate that, Sanjay. Please hit the like button. You feel me? Rhonda Green. What's going on, Rhonda? What's up, Hines? Yo. What's going on, Davita? Davita Applebum. Go ahead. Davita Applebum. Go ahead with yourself. What's up, Davita? What's going on, Thomas? Hello, Brittany. Haven't seen you in a while. I must say so. Hey, man. I see a few more numbers than I see names, but that's all I see in the chat. So we're going to go ahead and get into it. Stay on the screen. Brittany, get off my screen now. You've been there long enough. Hey, we have a droppity drop. Before we look at a droppity drop, let's go see what the numbers were. Were the numbers horrible? Do anybody know what the numbers were? Monday, Wednesday, and Friday, I go running when I take the boys to school. So I haven't had opportunity to look at anything since 3 o'clock this morning. Hey, I got up with the old man. Let me go on full screen for a second. I got up with the old man bladder today sometime around after 3 o'clock. and I decided to come in here and mark my London open and my midnight open on the chart like I do, and I saw what seemed to be like an opportunity to take a position unfolding, but I had a whole lot of sleep in my eyes. I'm trying to hurry up and rush through and verify it, and sure enough, what I thought I saw unfolding was unfolding, but by the time I verified it, I had just missed the move. I had just, when I tell you, it had just hit the price and went back up, and I sat there for about 10 more minutes, and it never came back to the price again. It just went off without me. Once we go through the price section, if y'all want me to do a teachable moment with what I saw about to transpire this morning around 3-ish, put a 1 in the chat, and then I'll break that down exactly what I thought I saw, how I broke it down, and all of that right there. Just put a 1 in the chat if you want me to make that a teachable moment this morning. If you don't know about econoday.com, econoday.com is my site of choice to come get my economic data. You can also go to forexfactory.com and get the same information. As you see over here, you see a word that says consensus and a word that says report. Consensus means that event has not happened yet, right? Report means that event has happened. If you click on consensus or report, it takes you to the same page. But the difference is once it says report, there's a column to the far right that says actual. Right here, there's a column to the far right that says actual. So they have the consensus and then they got the actual. So on here, the consensus was 250,000 and the actual was 263. If to figure out if it's good or bad, you can read through the definition of what it is and why investors care, and it'll let you know. Man, my allergies acting up for real. Y'all hold on. I've been out there running. My allergies on 10 right now. If you read through the definition and why investors care, you can figure out what's good or bad about the numbers. So I ain't gonna hold you. I don't know what the market like or don't like about this, but if you go through here, it usually give you a clue of what the market like. Gains in average hourly earnings represent wage pressures. It is worth noting that these figures aren't adjusted for overtime. Okay, that's when pressures. Let's go up here. Importance. Blah 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 blah. On the revealed labor, but blah blah blah. Additionally, Feds has made interpretation. Okay, the bond market will rally when the employment situation shows weakness, and it will fall when it shows strength. The equity market often rallies with the bond market on weak data because low interest rates are good for stocks. But sometimes the two markets move in opposite directions. After all, a healthy labor market should be favorable for stock market because it supports economic growth and corporate profits. At the same time, the bond traders are more concerned about the potential for inflationary pressures. Okay, so it's saying the equity markets may rally with bond market weakness. So if the bond market is falling, the equities, wait a minute. The equity market often rallies with the bond market on weak data. Okay. Okay, so weak data makes it rally, but sometimes weak data will make it go up. All right. All right. So what's weakness? All right. I guess this is weakness. Let's see. If ever there's an economic situation, blah, 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 blah. Economic data gives comprehensive report. What the The employment statistics also provide insight, wages, blah, 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 blah. If inflation is under control, it is easier for the Fed to maintain. If inflation problem, blah, 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 by tracking the job data, blah, 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 blah. Importance, we saw that, blah, blah. Comprehend, blah, 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 blah. Let's go up here. Let's go up here to the outlook. Okay, consensus. A 250,000 rise in economic consensus is up for non-farm payroll growth in September, which could compare with higher than expected 315 rise in August. August was the 5th straight month and 7 of the last 8 that payroll growth exceeded expectations. Average hourly earnings in August rose 0.3% on the month. Earnings in September are expected to rise 3% on the month, 5% on the year. Okay, so it was expected to go 5. It went 5, little short. Expected to go 3. Did that. Unemployment rate 3.7, 3.5. Unemployment rate lower than expected. That sounds good to me. Non-farm payroll 250, 263. That sounds good to me. Okay, so if it's good, all right, if it's good, so that's strong. All right. I'm just trying to figure this out, what's good or bad about it. We're going to get to it in a minute. So that's higher. That's higher. Okay. So the bond market will fall with weakness. Will fall with strength. Okay. So the bond market falls with strength and then it rallies with weakness. So since it was strong, the bond market should have failed. The equity markets often rally the bond market weak data on bond market weak data. I don't know, because that seemed good in my book, and the bonds fell, like they said. The bonds fell because it was strong, but so I guess they moving together. They moving together because it says sometimes they were moving opposite directness. Right there. Ain't that what they said? I ain't trying to figure that. See, this is why I don't try to figure out the economic data. This is why I just wait until the market react to it and then look for my entry. You feel me? My head hurting now. Since we already on Al Gore's internet, get out of here, Econo Day. You got my head hurting. Let's go over here and holler at Spyleen. Spyleen, where you at, baby? Here I go. Hey, there she go. Hey, how you doing? I see what you try to do. Okay, Spyleen has gapped down into, well, I ain't say has, is about to gap down into this gap that we were talking about. Remember, we was talking about we need to come take care of this. Forget about this crazy, unnecessary, don't supposed to be there wick right here on Tuesday, because we didn't trade down that far. Remember, we said yesterday we actually have a gap, a full gap right here. There's actually a full daily gap right there, and I'll leave it trimmed in red because it's a full gap. It's not let me change it to the same color as the other ones. What color is this right here? I got white on the other screen. Why are these daily gaps a different color? What's going on here? What haberdashery hemoglobin going on here? Let me see why this is a different color. Okay, that big one is a monthly gap right there. Why is this daily gap up here a different color? Hold on for a second, man. Y'all know my ADD going to acting up right now because I can't gray at 19%. I can't take that. I can't take that being the wrong color. Okay, so boom. Let me put that black right down. All right, so now we got that together. We got that together, and we're gonna leave that trimming in red because it's a full gap. It's not a fair value gap, it's a full gap. Okay, so like I say, ignore that crazy wick, but we do have a full gap right there, and we have gap down inside. We done almost gap to the bottom of that full gap, but we did gap down. Let's see if we go ahead and take care of this full gap, get down into this wick so that we don't leave no gap down here. It would be nice to come all the way down here and touch this wick right here over here on this Friday's candle so that we won't have a fair value gap in there. Going to push down all the way down and going up. But you know, we getting down here to this this gap, which is healthy for price action, even if it decide to keep on sliding. But this right here is healthy for price action to come down here and get this this gap right there that we had made. Now let's get back to the overnight price action. I see some ones in the chat, so we will Fed wants less jobs available. Okay then. Okay. That so what is it saying? That we had more jobs available, that's why the market ain't like it, or so they think the Fed gonna keep hiking rates? I don't know, man. I try not to figure out how the algos interpret that. It's not good for the market. The Fed want unemployment numbers to go up. Yeah, they want the unemployment numbers to go up. I know that. The Fed want the jobs to decrease before they can lower interest rate. The fact that the jobs are higher or increase means the Fed will continue their hike. Yeah, that's what I was thinking. Like, since the job market's still strong, the Fed's gonna keep on being aggressive. That's what I was thinking. Like, the Feds don't like that as good. Well, the algos don't like that as good because they think the Fed gonna keep getting aggressive. Okay, makes sense. All right. Appreciate that. I appreciate that. Now, I see some ones in the chat. So we're gonna break down the overnight price action, and at the same time, I'll make it a teachable moment. Everybody see what happened when the numbers came out. We died. Okay. Prior to us dying, right? This is yesterday's close. If y'all notice, I ain't got the text and stuff on the screen no more because the text be getting on my nerve, right? If I don't call out the levels, I'm sorry, because I might be forgetting to double click and look to see what that level is, or hover over here and peek over there. The text be getting on my nerve. Get out my way, text. I don't need the numbers. I just need to see the line. That's all. Take a screenshot and write it down. I don't know. But we yesterday we came down after hours during the Asian and ricocheted up off of something. I didn't go to see what we ricocheted up off of, but we ricocheted up off of something, right? And then came back up and then sold back off. We just kind of dilly-dallied, pretty much. We dilly-dallied, right? So here we go after these 15-minute candles. Let me put it, when I walked in here, it was on 60-minute candles, right? So when I came in, it was, let me see, what time? 3 o'clock right there. That's 3 o'clock candle. That's the 4. So this candle wasn't made yet. So it was like after 3 sometime, right? This candle wasn't like fully made yet. It was after 3 sometime. Let me go in and see exactly where I missed the move at, and I can let you know exactly what time I was back here. Right here. This is the candle. So the 4:15 candle. So it was after 4. It was after 4. So the 4 o'clock candle was being made. So the 3 o'clock candle was already in place, and It was after 4. So because these 3 candles were the 3 candles that I saw on the 15 minute. So boom, I'm going to put it there. I'm going, like, these 3 candles was already there, and we were making this candle right here. This candle was being made when we came in, right? So on the hourly level, I saw it on the hourly level. Boom, 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 boom. I come in, I'm wiping the cold out of my eyes because I had woke up with the old man bladder, right? So immediately I'm looking, I said, okay, we have taken out yesterday's low. We've taken the low out. Boom, knocked it out, right? So I grabbed my line. The line was over here on where was it? It was here, up here somewhere. This is what this, right? The 5th. That's the 5th, right? So that's the 5th right there. And yesterday's low was over here somewhere. So I had to line up here somewhere, right? This was yesterday's low, right? And then yesterday's high was right here, right? That was yesterday's high. No, yesterday's high was over here. That's why I didn't move this line. But the New York range high was right there. All right, so boom. All right, got my bearings together now. So I grabbed the line, moved the line from up there to down here, right, on the hourly candle, right? And I'm like, oh, we got a new daily box. We got a new daily box because the day starts at 1800 right here. The day start right here. That's the day. You know what I'm saying? It started there. I'm like, okay, we got a new daily box. Okay, boom. This is the top of today, right? So I see it transpiring. I'm looking, I'm like, okay, we in a discount. We ran into a discount for the day, right? And then we blasted off. Yeah, we blasted off, and I'm looking at it. So we done came down in a discount for today, ran sell side liquidity on today's box, right? We ran sell side liquidity on today's box, and then we took off, right? And blasted off heavy, left a big fair value gap right here, right? And then we got a breaking structure right there. So I'm like, okay. So we about to pop up for a little bit because we're in a discount on the day, and we just ran external liquidity. We just took out external liquidity on the sell side, right? From yesterday's low, right? We took it out here, right there. We took out external liquidity right there from yesterday's low. We pushed back up, right? We pushed back up, and then we sold off, right? And took out external liquidity again. When we took out external liquidity this time, we blast off, got a breaking structure right here to the upside, right there. This green candle here broke structure right there. Boom, it broke structure. We started coming back down, right? So I ran the fibs to check equilibrium, right? All this is all transpiring. The market's still moving. So I done got my bearing. I understand where we at. I run the fibs from the high to the low of the new daily box, right? This is the new day. This is the new day here. We took out yesterday's low, bow, took him out, right? And this is the high on the new day. So I ran it from the high to the low on the new day, right? That's equilibrium right there. 37, 47, 50. Boom. Put my I made the yellow dot. That's my yellow dotted line. That's my equilibrium line now. That's what I chose for equilibrium. Yellow dots, right? So boom, that's my equilibrium line, right? So we still going out. I'm like, okay, boom, that's my equilibrium line. We getting ready to, bounce back up because we got a breaking structure. This is my target right there, because I don't know how far we're going to go. So I'm looking for the lowest hanging fruit I can find. The lowest hanging fruit I can find is this swing high right here. I don't have, because this was the breaking structure, I don't have any other PD arrays in the premium market of this range, right? Anything above this 37, 47, 50 premium market. Anything below discount market, right? We pushed up into the premium, came down, hit this fair value gap right there, right? And pushed back down to the discount, right? We got the breaking market structure. We pushed up to this fair value gap. That PD array has been taken care of. Boom. We filled the fair value gap and pushed back down. So when we come in here and I'm like, okay, we getting ready to bounce back up, I look for the next PD array up here that I want to be my target. The only thing I see is this swing high because we already took care of this fair value gap, right? So boom, I want to go in on this fair value gap right here. Price still moving, right? So when I figure out where I'm at, get my bearing, what I want to do, right? This candle has already come down, and let's drop to 5 minutes, right? Boom. We dropped to 5 minutes because I like, if I'm seeing it on the 15-minute, I like to drop down to the 5 minute to double check to see if it's anything lower than what I see on the 15, right? On the 5 minute, we went down here. The high on this candle is 37.40.75. The low on this candle right here is 37.40.75. We had already touched this low and pow, took off. So you already know what I did. I said I typically want to take it at 50% of the fair value gap. We got a fair value gap right here. And if you notice, remember, we just I just learned what volume imbalances are yesterday because I never watched that not liquidity imbalance and liquidity imbalances. If you notice on the 15-minute, right? On the 15-minute, this excuse me, is a fair value gap right here, right? This is a fair value gap on the 15-minute, right? If you notice on 5 minute, when we come into the discount, what did the market seek out? When we came into the discount, the market sought to fill in. We came back down and we filled in this volume imbalance on the 5 minute. This entire volume imbalance got filled in. See how it came down, took care of all of that. And it also took care of a fair value gap on the 5 minute. But these two candles right here are the volume imbalance, liquidity imbalance. I keep saying volume. The liquidity imbalance on the 5 minute because we consolidated and we blast off. That's your liquidity void. That's the word. I'm saying the wrong thing because I just learned about it yesterday because I usually call this a buy side imbalance. If y'all ever heard me say, I'll be like, okay, we got a big buy side imbalance over here, but this is what ICT referring to as the liquidity void right here. So by the time I had figured it out and dropped down to the 5 minute, we had already touched the bottom of the fair value gap, right? So boom, I come in and I'm like, okay, it'll come back down to 50% of this right here. I put my order in right here at 50%, right there at 47.43, right? It never came and got me again. I don't know if you can see it, right? I put my order right here at 47.43, but I don't know if y'all can see that wick right there. It never came and got me. I sat back here for like 10 more minutes waiting. It never came and got me right there. I said, it is what it is. You live to trade another day, you know what I'm saying? Because I was trying to verify it. I was sleepy. I didn't want to just jump into something without verifying it. But that's what I saw. And the reason why I did it, just a quick breakdown one more time. The reason why I did it is because we had came in. I mean, we had come down with the opening. We came down and took out yesterday's low. Boom, took it out with authority. Deep down below it, right? Out of there, right? So we came back up and we set a high for today, and then we sold back off, right? Set a high for today and then sold back off. Let's go. Let's look and see exactly why we sold back off there, right? These 60-minute candles right here. So we came back up very close. We did not touch any of these candles here on the 60-minute. On the news candle, we popped back up into this bearish order block right there on the news candle. We pushed back up into that bearish order block. I was looking to see because on the 60-minute we came up, failed to take out that high, of course, yesterday. Then we came through and we broke market structure right here. And then that, yep, there you go right there. That's it right there. So right here, we got us a little mitigation. We got us a little mitigation block over here. We got, and it's kind of tricky because we got 3 down closed candles right there. We got 3 down closed candles in a row. But how we came up and we didn't take out the high, right? Then we pushed back up again and didn't take out that high. So we came down and we broke structure. When we broke structure right here, right, you got 3 consecutive down closed candles that we came back up into. Boom, right there into your mitigation block right there. Let's see how much of a retracement we went into that mitigation block. Just almost at half. Just almost, we went to almost 50% of this mitigation block right here. Right there, almost to 50%. So that's the reason why we sold back off right there. We hit this mitigation block and we sold back off. Right. So once we sold back off, I didn't even notice we hit the mitigation block last night. I ain't gonna pretend like I did. I just saw that right now looking at it. Like I say, I was sleepy. I ain't get a chance to do all the due diligence. The market is open. The market is open. The market is open. If you got to go trade safe. I appreciate you for hanging out with me. Do me a favor, hit the like button before you leave, because I ain't on no other social media, and the only way that's gonna get out to other cousins like yourself and like me is if you hit the like button. Please hit the like button so that as many people as possible can get this free information, because hey, we're gonna build a new Wakanda together. We can't build a new Wakanda together if we're giving all our money to somebody else. We're gonna learn how to do this together for free, and we're gonna take all that money, we're gonna put it in the market, make that money work for us while we sleeping, and build generational wealth just like that. You hear me? Appreciate you. Oh yeah, it's Friday Night Lights, so we ain't gonna do no video this evening. See you Sunday. But then we set a new daily top right there, came down. So the reason why I was looking at it, because we took out we had taken out the low from yesterday on the open, right? And then we had come down and took out the low from Thursday on the 3 o'clock candle, right? So right before the London open, we took out the low from Thursday. So we had took out two daily lows, right? We had took out 2 daily lows, right? And then we didn't come back up and take out this new high, right? And we was in the premium of it, right? We was in the premium of the day. So this was the top of the box. This was the bottom of the box. So we're in the premium of the day, right? And since we was in the premium of the day, I don't want to buy in the premium, right? We was in the premium of the day, and we had already started to, come back down. We had started to come back down, right? We had started to come back down, and we were around here somewhere. This candle right here. We was on this count. We was somewhere making this candle right here. This the 4 o'clock candle. We was somewhere making this candle right here, right? So I don't want to buy in the premium. I want to buy in the discount. So I had to find equilibrium to see where are we, right? Boom, found equilibrium. I noticed that we had to run the lows, push back up to the premium, to fair value gap in the premium, right? We had pushed back up into a fair value gap into the in the premium, came up here, boom, hit this fair value gap right there and started to push back down, right? So we coming back down to the discount. We have a humongous fair value gap in the discount, right? We just took out a fair value gap in the premium and came back down to the discount. So that's why I was looking to go long off of this fair value gap, because there was no other PD arrays to the south side or lower other than the external sell side liquidity. And it wasn't probable that we were going to take out the sell side liquidity, because we had just taken some external sell side liquidity. So it was more probable on this day, right, to attack the buy side to continue down, because we had just taken external sell side. So we need to deliver it somewhere before making the move. We're either going to deliver it to the buy side and continue up, or deliver it to the buy side and then continue down. But we had just taken external sales side. So that's what made me put me in the mind frame of it was a highly probable trade to the upside based off the range that we had just set for today. And then we had just went into a premium and moved back to a discount, and we was coming up to a PD array in the discount market. And that's why I was trying to go long, even though I missed it because I was trying to verify the trade. But I just wanted to try to share that and make it a teachable moment to see, you know what I'm saying, to help see it the way little Timmy Rogers see it in my head. All right. Do anybody got any questions? I'm gonna go through and mark my lines on my chart and start to watch what the market do. Do anybody got any questions or want to share anything? If anybody got any questions or want to share anything, the link is pinned to the top of the chat. I just dropped the link in the chat one more time. Good morning, Audrey. Good morning. How are you? Good morning, Kareem. What's good with you? You're welcome here to learn and share. You're very welcome. I just want to share that breakdown, share that teachable moment. Okay, we have a new top of the box, a new daily top. So let's mark that. We got a new daily top because we have pushed lower. We have pushed lower than the bottom of our box that we were tracking. So we're going to adjust the box down. Right? This is the range that we're looking at now. This is the top of the box, and then the bottom of the box, we've blown through that. So let's adjust that down. Oh, wait a minute. I need to put it on the other wick. I got it on the wrong wick. Say that 10 times fast. I got it on the wrong wick. I got it on the wrong wick. We probably gonna keep pushing through this, but I'm gonna put it down here anyway. I'll put it down there anyway because that's where we are right now. That's my London open. So now I need to adjust my equilibrium line for today's range. Equilibrium is, man, that's almost right in line with London. Equilibrium is almost right in line with the London. 37, 38, 25. 37, 38, 25. On my fibs, whenever it fall like in between a number, I just go to the next number. Like this says 38, 37.13. I just put it on 25 because it goes is like 0, 25, 50, 75. So I just put it on 25 because it say anything above, if it's above like the round number, I just go up to the next number when it be like that on the field. Oh yeah, I took the right thing off. So equilibrium on the day, and put this for 12 a.m. So that's equilibrium on the day. So now this is equilibrium on the day. We are currently sitting in a deep discount on the daily range, and we're consolidating a little bit. Let's push up a little higher and see exactly where we at. What's up, King Ali? I don't see anybody asking anything in the chat. I keep peeking over there from time to time while we look at this. Okay, so let's see where we at. On the ES, we have come down and overlap these with this wick right here. We filled in this daily fair value gap. I thought we marked that last night. Oh, we did. Here it is over here. I'm like, I thought we marked that last night. I marked it on my other chart. And so we got a full gap up right down here. That's the full gap up. I was like, I would love to see us get down to that full gap up. So we on the news calendar, we pretty much blast to the bottom of the daily fair value gap, right? We blast to the bottom of that. And then this is the gap up. I mean, that gap that I said I would love for us to get. Let me go back over here, paste this over here and see. Right. No, volume imbalance. That's what it is. It was a volume imbalance. That's what it is. I got to get my thoughts together. I can't be remembering why I be putting all this stuff on the chart. So it was a volume imbalance, not a gap up. That's what it was. So it's a volume imbalance on the daily, on the ES, right? The most important thing that I was wanting to get was this fair value gap, which we did on a news candle, but then there's also this volume imbalance right there. So I would love to get that volume imbalance also. Will we get it? I don't know, Raggy. You know what I'm saying? I don't know. The algos might be saying, man, forget your volume imbalance, punk. Forget your volume imbalance, punk. Let's see what the weekly candle looking like right now. The weekly candle is still muy green. Yeah, I do not see enough weakness to turn this into a red week. I really do not, because that would be a lot of selling in today to turn this into a red week. To turn this into a red week, we would have to get below 35.95.50. We would have to get below 35.95.50 to turn this into a red week. I do not see that much weakness on today. Not with the way the week been playing out. We're just gonna say 37.04 minus, what did I say that was? 35.95.50. I'll just say 35.95, 35.95. We would have to drop another 109 points today to close this week red. I do not see that, because how many points are we already down? Let's go see how many points we already down. We closed yesterday, we closed at 37.56, and so we're down 40 some points. 37.56 minus 37.05. Somebody do that math real quick. 51 points. We down 51 points right now, and to make this week red, we would have to drop an additional 100 and something. What I said, 35.95.50. 108. We would have to drop an additional 108, then add 51 to that. We would have to drop 100. We'll have to drop 160 points today. Yeah, I don't see that much weakness. We're about to get down to that liquidity void right now. We're pushing toward that liquidity void right now. Not liquidity void, volume imbalance. I've been talking about liquidity void so much, it's stuck in my mind now. We pushing to that volume imbalance right now. Okay, so on the daily, we push to the volume imbalance. Let's see what Spalene doing. Okay, Spalene is down below this gap up. We're down below this gap up, and we're coming down and getting down. Like I said, I would love to see us come down and get all the way into this wick down here, because that would, fill in this entire fair value gap, because this, from this candle on the 30th to this candle on the 4th, there's actually this crazy looking wick is messing up, but there's actually a fair value gap right there. That's actually a fair value gap. So I would love for us to come all the way down and touch this wick right here, at least to take care of that fair value gap. I would just love that. That would be very healthy for price. We got into that volume imbalance. Now let's see how this plays out after taking that volume imbalance. Let's go down to the 4 hour. I don't see anything else. Did y'all see anything else on the daily chart? Okay, on the daily chart, I don't see anything else. We got we came down, we got the daily fair value gap, we got the volume imbalance. Okay, so take that off. Got the daily, we came through the daily fair value gap, took care of the volume imbalance. This order block right here, 50% of this order block would be at 36.66. If we were to come down to 50% of that order block, that'll put us at 36.66. That's I'm gonna put a line there so I can see what that translates to on the lower time frames. 37.66. I mean 36.66. 36.66. I just want to see what that translates to on the lower time frames. Why can't I click this? There you go. All right, let's drop down. I don't see any other PD arrays down here on, on the daily. We've taken out the fair value gap. We've taken out the volume imbalance. Now let's drop down to the 4 hour. On the 4 hour, okay. At 50, we got a huge 4 hour daily fair value gap that exceeds 50% of that. And then we also have a breaker right here. We got a 4 hour breaker right here. Okay, we got a 4 hour breaker here. So on the 4 hour, we got a 4 hour breaker here. That's the body. That's just the body of the breaker. And if you don't know what makes that a breaker, this high right here broke this low. We came down, we broke this low, and then we had a violent reaction. Boom, take off. So once we exceed this right here, this is now a breaker, right? This, once we exceeded that, we made this a breaker because this high broke this low, right? Boom. Took off. Now that's a breaker. We're pushing down to a 4 hour breaker. This 4 hour breaker, you also have a 4 hour fair value gap in that same area. You have a 4 hour fair value gap in that same area. And on that price leg where all of those PD arrays exist, that is a 62% retracement right there. What's this right here? 64. Oh man, that's too big. That's too big. I was about to try that, but that's too big of a risk. That just looks so delicious though. That looks so delicious though. Let's see. We're gonna put this at 36, 65, 50. That, and that's right in line. That's right in line with the other. Because we said it was 36.66. We said it was 36.66, the other one. I thought I put a line there. I didn't put a line there. What did I do? I could have swore I put a line at 36.66. I didn't put a line at 36.66. Because I had the fib and I was trying to click the fib. I didn't put a line there. Because I remember typing in 3666. What happened to that line? What did I didn't put it over there. I could have swore I typed the line. I could have swore I put a line at 3666. And then the other one came up at the same spot. Got another fair value gap down there. So we got a breaker right there. We got a breaker. We got a 4-hour breaker right there. And was that equilibrium? Okay. Equilibrium was there. That's the discount right there. That's the discount right there. What was that 37.66? What was that? What was that 30? What did I say that what was that? I said 37.66 for something. What was I talking about? And we got a hourly. We got an hourly order block in that same place. Man, the stars are aligning on that. It's just that the risk to reward. Let me see. So 5 minutes. And then 65. 46. See, that's 10. That's 10 points to the bottom of that fair value gap. That's 10 points to the bottom of that fair value gap. That's outside of my max risk. Then we got that's outside my max risk. If we get down there that far. So we got an order block in the same place here. Got a bearish order block there. I mean, bullish order block here. Coming into the discount. That's just outside of my risk on that. I'm gonna be slightly upset if that comes down there and bounces off of that and go, because that's outside of my risk to take that trade right there. Anyway, let me see what y'all talking about. My stomach's starting to growl. With the news about oil prices going up, I think we will have a red day. Yeah, we already on a red day. The day already red. The day big red. Yeah, the day big red. Right there. Big red, just like the gum. Big red, just like the gum. Yep. So I remember saying that 37.66 because that was 50% of this order block. I guess I never put a line there. I could have swore I put a line there. And then when I went lower and I just did equilibrium on the run, and it came in, it was the same place. The discount. The discount was in the same place. Right there, 36.65. Just say 37. You know what I'm saying? It was the same place, but I guess I just didn't put a line there. IDK. Yeah, we already got a big red day. Big red. Big red. Putting us down into a nice little discount on the market. Let's see how we finish up today. Let's see if we come down here and bounce up for the rest of the day, or if we just, sit down and stay down here. The way we pushing down, we heavily discounted right now. So I foresee maybe even later during the London close or during lunch, us, you know what I'm saying, popping back up a little bit. Because right now, so for the range that we're in, for the price leg that we're in, right? For the price leg that we in right now. So for the price leg that we in right now, we just moved, crossed over and moved into a discount market, right? We just crossed over and moved into a discount market, right? Coming up on this breaker. Was that on the 4 hour? I think that was the 4 hour where I found that breaker, if I ain't mistaken. I think that was the 4 hour I found that breaker on. I'll double check it in a minute. Yeah, so we just came into a discount coming up to this breaker on the 4 hour. So we're in a discount on the price leg coming up to this breaker. Of course, we in a discount on the day because we continuously making lows. So on the price leg, we just moved into a shallow discount coming up on this breaker. And then on the day, we are deeply discounted. So the probability of us having some type of little pop is very high. That's why I was like, the stars are aligning on this area right here, right now. You got a breaker on the 4 hour. You got a fair value gap on the 4 hour. Yeah. The stars at night are big and bright, deep in the heart of Texas. Got an hourly fair value gap just at the top of the breaker. You got an hourly order block, pretty much 50% of the breaker at a 62% retracement of the whole price leg. Got a small fair value gap below it. See what the 15-minute look like. Gotta make that too small and blow this up. All right, got a fair value gap in the same spot. Got an order block in the same spot. Nobody saying nothing. And nobody, okay, nobody saying nothing. It's cool. All right, let's see how we react. Getting down into this breaker. Consolidated right here. Created a little liquidity void on the 15-minute. So this right here probably be sell. Let's see what the hourly candle look like. How big the hourly candle is. In the grand scheme of things, we got 13 seconds left on this hourly candle. Coming out of this area of sloppy consolidation, this is a huge liquidity void on the hourly right there. Got two big red candles. deep in the heart of Texas. Equilibrium right there. Right above that candle right there. Uh, Daily order block. Somebody said daily order block. Yeah. That's what. Yeah, that was the yeah, I think that was when I was looking at 50% of that right there. Yeah, the body of the order block. Yeah, 37.66. But I thought I put a line. That's what I thought, I put a line there. And when I went back to put that other line, it was in the exact same spot. And I'm like, wait a minute, I thought I put a line there. Thought I put a line there. I ain't gonna hold y'all. If we come down here, I'm not gonna take it. I'm not gonna take it on the ES. I'm not gonna take it on the ES, but I'm gonna take it on the MES if we come down here. I ain't even gonna hold y'all. If we come down here, I'm taking it on the ES, the MES, and I'm only giving it to the bottom of the breaker. Cause let me see 65. Let's just go 66 even, and then the bottom of the breaker is what? Nah, that's still too far. That's way too far. 66. 66 minus 5. That one would be giving me to the bottom of the order block. That's gonna be real tight. Let me see, 15 minute. Oh, 15 minute. Give me 15 minute. What's this right here? What's the bottom of that? 59, 25. What's that? 59, 59, 50. So 58, 50 plus 5, 63, 50. If I gave it 5 points, tight stop. What if I went to my max? $58, 50 plus 8, 66.50. If I went to my max, I could take it at 66.50. Am I on the MES? Yes, MES. I'll give it to below these lows right here. If we get down there, I give it to below these lows right here. See what happens. That'll be my max. Wait a minute, make sure I got the wrong one on. That's just gonna be 5. ICT said he done trading for the year to next February. Oh, really? It's right here. I'm watching for the same retracement, and if it turns around, the low 0.9 candle could be a breaker. The low at 9 o'clock on the 60, is that 60 minute? The low at 9 o'clock on the 5th. The 0.900 candle on the 5th. It's 11. At the 5th. Watching the same retracement. If it turns around, the low 0.900 on the 5th could be. What time frame? What time zone you in? Because this would be 11 o'clock candle for me. Oh, 4 hour. 4 hour. Okay. 4 hour. On the 5th. Wow. Okay. This low here, when I broke that, came down. Yeah. This, yes. So this low broke this high, came down, traded past it. So we could come back up. Yeah, right around there. This low broke this high. Oh, you stinking dog. You better not do that. You better not take off from there. You better not go from there. You stinking dog. You 36, 70, 50. You better not miss me by 1 point. You better not do that. You better not you. Yeah. Yeah, cause yeah, that low broke this high. Then we traded through it right there. So then we could possibly come back to that. If we just say we don't stop, like just say we don't stop at this, just looking at what we're doing, just say we don't stop at this breaker and then start to go back up, right? If this is a sell model that wants to complete from this area here, that can potentially take us down to get below this this 35.71. But if this breaker holds strong and then we start to push back up and start to break these highs, not saying today, but just, you know what I'm saying, overall, if we hit this and start to push back up like next week or whatever and start to break these highs, then you know, let's see what it look like on the daily, because we are coming up to an order block. We're tapped into a daily order block right now. Right there. So we're in a daily order block, right? This is the daily order block right here. And right there, I got the order sitting right at 50% of the daily order block. And it's in the same spot as this breaker. It looked like this funky dog gonna miss me by 1 point if it continues to push back up, but I'll see. I'll give it a little bit of time. But yeah, I peeped that. I appreciate you for putting that 4 hour breaker on my radar. One thing I don't like about it, when it have like super long wicks like that right there, that gives like a really big range. You know what I'm saying? It give a really big range of it to. One good thing about it here is we had a whole lot of consolidation within this wick. So, you know what I'm saying, we soaked up a lot of the liquidity that was up in there. You know what I'm saying? Like I always say, you know, when we make long wicks, we typically revisit those wicks. And as you notice, right there, you know what I'm saying, we came close to the bottom of the wick a couple times, then we broke through it, then we pushed up and came down Baby Yo Street in the Range Rover, because we had went in and soaked up all of that, you know what I'm saying, excess liquidity that was left in there from that long whipsaw action, right? My stomach is officially on growl, people. I appreciate y'all for hanging out with me. It's a tad bit cleaner on the. I do not know what that is. What's 1KR? I do not know what that is. I'm sorry. I do not know what that 1KR is. Look at this. Look at this funky dog. If this keep going up, it is what it is. Live to trade another day. Live to trade another day. Oh, 1 hour. Oh, okay. 1 hour. Okay, let's look at the 1 hour. Yeah, that's 11 o'clock for me. That's when I was like, what time zone you in? Because you was like the 9 o'clock candle, but it's 11 o'clock for me. Appreciate that here to learn and share. I appreciate that. Yeah. I appreciate that. Power Move say the dollar falling. Power Move say the dollar falling. So look for the ES when the dollar and the ES, they typically have an inverse relationship over the long term. It don't be like, you know what I'm saying, inverse second by second, but over the, you know what I'm saying, over the day, weeks, whatever, they tend to be inverse. So if the dollar starting to fall, then the ES should start to rise. Appreciate that. I appreciate you, FC. I will enjoy the game. Win, lose, or draw, I'll be out there rapping for my son. PST, but my chart set to. Oh, okay then. Yeah, cause my hourly chart say 11. I know, right? I know, right? Yeah. You feel me? Hey, man, I got out the truck yesterday. I parked in the grass, and it was a I didn't realize it was a dip under the truck. You know what I'm saying? Because I know we had went down an incline. When it wasn't no steep incline, we because we was parking in between some trees that was at the football game, and it dipped down and it came back up. I thought I was on level ground. I was sitting over a dip. The front tires was on this side of the dip. The back tires was on this side of the dip. Right. So when I stepped out the truck, I had my camera with the big, I had the big 70 to 200 lens on there, had it on a monopod. All right. And I'm getting ready to get out, put my foot out. And when I put my foot out, you expect your foot to hit the ground at a certain point. My foot kept going. I slammed into the door with the camera in the monopod. Bam! Scraped my knee on the side of the cup holder on the truck. Man, I was like, oh my goodness. It's like I'm so sore all up in here, because it's like, if it wasn't for the door, I probably would have tumbled all the way out. But the door was like right next to another truck and another tree. And a tree, it was a truck and a tree right there. So when I fell out, I'm grabbing the door. I'm trying to hold the inside of the door because the window up. I'm trying to hold it by the side, and I slammed against it with the camera because I didn't want it to slam into them people's truck. Man, all this right here. Last night it was hurting so bad. I'm like, man, what's wrong with my side? And then I thought about it. I'm like, I fell out the truck. And then Chris got out on the other side, and he was like, whoa. And I was like, what's wrong here? Like, you right. It is a big dip down there, because it was like a drop off up under the truck. Like, man. Anyway, yes, I will. Yesterday, I had the camera going constantly, and yesterday ended up not even being a real game. They just did a scrimmage because when they got there, they didn't have any referees. So both coaching squads, they said, "Hey, we just gonna run a scrimmage." You know what I'm saying? 10 plays, 10 plays, every possession starting from the 30. No matter what happened, just run 10 plays and that's all they did. They just ran a scrimmage back and forth. They just, you know what I'm saying, once the 10 plays up, or if they turned the ball over, they just reset at the 30. If they score, they reset at the 30. They just ran a scrimmage. So that's it. That's why we end up getting back so early, because they didn't play a real game. I appreciate that. I appreciate that. Yeah. Hey man, hey, I'll holler at y'all. If y'all ain't still watching the charts, as you see, it looked like 37, 36, 70, 50 was the spot that it stopped at. I had my order at 36, 66, 50, and it's going on without me. So I'm gonna go ahead and take this off now. Whenever I miss a move like this right here and it get that far away from me, I just say forget it, and I go ahead and take it off. You know what I'm saying? I'm going to take it off. But I'm about to go eat me some cereal and watch some TV. I'll holler at y'all on Sunday, man. I appreciate y'all for always tapping in with me and hanging out with me throughout the day. I don't have nobody to talk to throughout the day. I appreciate y'all just listening to me run my mouth. I'll see if I decide to do nope. I'm gonna start recording my videos. I was gonna say I was gonna do an inside the mind of little Timmy Rogers, but I'm gonna start recording some videos this weekend. I'll see y'all on Sunday at 3:00 when we look at the week to come. I appreciate y'all, man. If you're gonna trade safe. If you're gonna watch the market, take copious notes. If you're at work, I salute you for being at work and investing into your education for the free 99. Hit the like button for me. Share it with somebody so that other cousins can get this free information. Gone.